How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on British pound versus Japanese yen. As you can see, we're in a new month. We have our IPTA look back data range set up here. Now, for those that watched the last Forex Friday video, we talked about why we picked GJ. Let's go through a quick synopsis of why we went and picked GJ for this month. So, seasonally, the market was moving in a symmetrical market, meaning they were moving inversely. British pound was down and the DXY was up. So I like that. That checked off a box for the filtering process. Secondly, there was an interest rate differential between the two banks. So the Bank of England, where is it at? Up here, 5%. And then you got the Bank of Japan, 0.25. So there's a 5% difference, interest rate differential. We recently know in time there have been huge interventions for the Japanese yen, and the BOJ has been increasing the interest rate. So trying to get that fiat currency a lot more interested to investors. Now, I don't know if they're going to continue to hike into the rest of the year. Who knows? We'll see when that time comes. But we're going to go through day-to-day price action as we always do on the channel. If you also take a look at the Japanese yen, you can see it's going down. So I'm glad to see it's going down and inverse to the DXY. Now, it's a little funky because many people may say, oh, you're trading GJ, but you can also see that British pound is going down for the seasonal tendency. Even though British pound is going down for the seasonal tendency, does not mean GJ won't go up. Because when the dollar goes up, most likely the yen crosses go up as well because the yen is decreasing in value. It's a very interesting triad or correlation with the yen crosses, but it's very volatile. Best to believe that these markets are getting ready to move. Plus, last month was a small range cycle. So if we go in the monthly chart, we can see last month just the body of the candle was small. So we're anticipating the next month to be large and dynamic. Many of the yen crosses are small. So this month I would really pay attention. Either it's going to be great buying opportunities or selling opportunities. Either way, I do think that the yen crosses this month for September will be very volatile. Now, if you go back to the daily chart, we have our IPTA look back data range. You have the 20-day high, 40-day high, 20-day low, 60-day high, 60-day low, etc. We have our September opening price, so we know where premium and discount levels are. Already we can see after Labor Day, there was a huge sell-off. This is a Larry Williams smash day candle. This is a sell signal. This candle closes, the close of this candle is above multiple highs, several highs, and it sold off really fast. Now, does it mean that, oh, all of a sudden now we're bearish? Not necessarily. But this is a sell signal, and we'll continue to watch this. What I want to see is what recent swing points do we have in the price action that are broken? And we can see recently we had broke a swing high or multiple swing highs. This one, and this one. So right now the momentum is bullish. I would like to see if we get a higher swing low. So I don't want to see price break a swing low, but it looks like we might by the end of the day possibly break this swing low. So we'll keep an eye out on this. So if it breaks this, that would make me say, okay, cautious. Is this going to be a false break, rally back up? Or is this going to be a break, follow the momentum, lower swing high, lower swing lows, and we continue to sell off? Let's take a look at the DXY. We'll set up the IPTA look back data range for this so you guys can actually see how I do it. So I come to the start of every single month right here. We're going to look for 20 bars because we're on a daily chart, so it's going to be 20 days, excluding weekends. 20 bars here. It's another 20 days. Again, 40, and then 60. There we go. Now we're just going to find the highest high and lowest low in each one of these quadrants. I believe that's the highest high there. We'll do the same thing for the 40-day. We'll do the same thing for the 20-day right here. And now we're going to do the lows. This is 20-day low here. So price is definitely within a range right now from this range high to this range low. We're trading inside of a range. And we want to see what side of that range is price going to break. Is it going to be the high side or the low side? We can't predict that, but we're just going to watch and study price. And then we have old lows or old highs that have already been broken. And those can be used as projections on price or a sensitive price point where a trading opportunity can occur. We have our opening price. Right, clean charts. That's all I want to see. Clean charts. All right. And let's think about some scenarios. So if the dollar is supposed to gain strength, we would suspect price either trading down into some type of bullish order block, right? Some discount PDRA, or price trading away from down candles, or price creating higher swing lows and higher swing highs. So recently we did break a swing high. Let me see. Actually, we did not. That's not a swing high. So we're still waiting. So the first week, I always say to all my traders in the community, the first week, especially the NFP week, is going to flush out all the rookie traders. Anybody that has no discipline, who has no focus, who can't concentrate, who's emotional, they're going to get flushed out the first week. They're going to blow their account, especially on NFP at 8:30. They're going to waste all their time. Do not be that trader. If you're going to trade this week, cut the risk by half. Look for smaller projections. Do not look for the huge, home runs. Wait till next week to start increasing your regular risk protocol, and then you could possibly look to see if there's any home runs intraday. Now, intraday, speaking about intraday, we did have an intraday set up for GJ for the New York session. And I was just telling the chat if anybody can send me an annotation of UJ for the annotation for the New York model today. So if you take a look, you had a huge sell-off, and we have this zone here and this zone here. This is a dead zone between the kill zones, London and New York. We can see if we were to frame liquidity pools between it, we have this sell side here. Just to keep it very simple, there's sell side right down here below that swing low, and there's buy side above that swing high. Do you see how the New York session ran the buy side in that dead zone, the London lunch between 5 to 7, ran it out, pushed up, went above the weekly opening price, which is also the monthly opening price because it's the first week. So it's a monthly and weekly opening price. And it's above what? The New York opening price. It's not above the midnight opening price, but we can see there's some type of double confluence of being in a premium, right? It's not a triple confluence, it's a double confluence being above the New York opening price here. Normally the first daily update is pretty long, or some daily updates are long because I have a lot to talk about. Moving forward, they'll probably be really quick, 2 to 3 minutes long. So you can see here, that's the New York Open. This is the weekly open and monthly open. Look how price pulls itself above and sells off. Take a look at what happens when price runs that buy side. You're going to see, most likely, there's an entry technique that I like to see. So there goes that buy side there. There goes the New York Open. Price runs all the way up, right? Gets traders to probably chase the longs. And then all of a sudden, we get that same sequence or that coded pattern that the algorithm likes to print. We have a swing low that runs through. We'll take off this session indicator. That runs through. Sorry, we have a swing low that's ran through by a fair value gap. What would I do here? I would go short here. 1-to-1 scenario, 15 pips for 15 pips. And you can see that we're at least selling in a premium. We're not selling in a discount. We're not selling below the New York Open. That doesn't make sense logically. As a business person, there we go. The chart kind of froze for a second. Technical difficulties. We wouldn't sell in a discount. We would preferably look to buy. I'm not saying there aren't moments in time where you can sell in a discount, but it's just not the ideal or the pinnacle of all sells. The pinnacle of all sells will have to be above the New York Open, the weekly open, and even if the true day open at midnight opening price. But we have 2 out of 3 confirmations out of this. And look what happens. Play it forward. That's where you would go short and TP hit. And anything else on, if you're holding partials or looking for more, you can see how we get down to that sell side liquidity pool after taking out the buy side. It's a very simple approach. You just have to have the framework. And price sold off pretty strong. And you can see how it kind of mixed in and blended into that daily smash candle idea. And that's that daily swing low down there. So price is most likely going to hit that. We're going to see what happens moving forward. That's all for now. Hopefully you found this insightful. Peace.